Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for April 5th of 2020. We will be going through our usual agenda, look at the prior week, our currency strength meter, of which more in a bit because we're not going to be having one this time. Fundamental announcements for the week to come, a look at the major pairs on the daily charts, the setups we see in progress, and a few words in conclusion. Starting with ledgers, there has been no closed trades on the long-term accounts. So it is right now, we do have open trades and some of them are at profit, some of them at loss. Essentially right now we're break even. Last week was a bit of a bouncy week and a bit of a retracement as well. We had been carrying some open profit on the long term. Right now, we're at break even, but again, with the same trades open, so the story has not been finished yet. On the intermediate term, we did have a drawdown last week, again, retracement. So a lot of the trades were moving not only in both directions, but moving strongly in both directions, which is pretty much a recipe guaranteed to hit stop losses all over the place. So we'll be adjusting to that as the week begins. In case we're going to have a repeat, we'll be taking a few measures to take advantage of that situation should it be a prolonged sideways market. On the short-term account, we were almost at break even. We're down about 1% for the week, so not any significant movement. So really long-term and short-term were no movement. Intermediate, a bit of a drawdown ongoing. Notes and opportunities for improvement. As I said, a very bouncy, volatile week. The coronavirus is still the main factor, followed closely by gross incompetence. And I added that one because I continue seeing stories from all over. It's not just the US, it's all over the world of different rules applying in different jurisdictions, sometimes miles apart. I'll give you a classic example. The county in Pennsylvania where I live is technically under lockdown, but people are still allowed to go out and do grocery shopping, do anything deemed essential, and that apparently includes visiting state parks. So there have been people posting photos of parking lots in nearby state parks that are just jammed with cars right now. So again, it doesn't make a whole lot of sense. But more importantly, if I drive 5 miles down the road to the neighboring county, there are no restrictions. People are still allowed to go out and pretty much lead their lives as they please. So depending on where you are, and if you move 5 miles to the left or 5 miles to the right, you may have very different conditions applying to you. In another news story, there is a military hospital ship that was sent to New York City, the Comfort, and it was supposed to handle the overflow from local hospitals that are dedicated to treating the coronavirus and thus are either incapable of, due to capacity, or unwilling to treat people without the coronavirus, to prevent them being catching the coronavirus if they don't already have it. And again, simply because of capacity. So the Navy ship that docked was supposed to take the non-coronavirus patients out of New York City and treat them there. By mistake, 3 patients with the coronavirus were sent to this hospital ship. So basically, you contaminated the whole thing and did away with the reason for it being there in the first place. So again, gross incompetence across the board, which is probably not going to be a good thing in the long term. Oil is finding support. We had a bounce back in oil, and we'll look at that chart very shortly. But it's up about $10, maybe a bit more from the previous low from last week or the week before. So we are seeing oil gaining a bit of strength. I'm not sure if that's going to be a lasting situation or if it's going to go down again. As most of you know, I do trade oil in the options market. So my trades in oil, which I bought at the bottom 2 or 3 weeks back, are now nicely profitable. Again, it just couldn't continue going down It might have stayed down, but I don't see how it's going to go down much further than the prior low. I already mentioned the drawdown on the intermediate term account. And of course, I'm keeping that message there at the end. Our live event that was originally scheduled for the end of this month in Wilkes-Barre, Pennsylvania, that will be rescheduled as soon as we see some light at the end of the tunnel in the current coronavirus situation. Relative strength meter, and I pointed out in the beginning slide that I would not have this. I don't. These are the same slides that we had a week ago. When I went to produce the ones for this week, the system seems to be collapsed where I get these metrics from. It was giving me volatility in excess of 22 million%, which again, it was a very volatile week, but not that much. So some of the systems are obviously, and this is also, I'm going to blame it partly on the coronavirus. I am seeing a lot of services online and elsewhere that are not performing as advertised simply because the people are no longer there. I was joking the other day, I have one of these Alexa devices where I basically tell it to a little robot from Amazon where you tell it to play music or get the news or whatever. It usually works pretty good. You say, you know, Alexa, play Iron Maiden or whatever, and boom, the music goes off. Lately, she has been either misunderstanding or not understanding exactly what, or anything at all. It just beeps and doesn't do anything. And I was joking the other day that there really is no AI behind that interpreting what people say. It's just a bunch of Indians in a call center somewhere that are listening to what you say to the microphone, and they type the commands in the background, and then the device does whatever you want it to do. Half of them are either dead or off sick or laid off or whatever. So these devices are not working. A little bit of a bad joke on my part, but I find humor everywhere. So again, the relative strength meter seems not to be there for the week, and well, we're going to have to live with that. So I don't assume there's been much change in the 30-day view, so it's probably pretty close to what we had last week. The weekly is probably a little bit different, but again, I'll try to get some updates on it as soon as the system is back up and running, at least to see what the current 7-day window would be showing for volatility, but that's not going to be happening today. Fundamental announcements for the week, a pretty light week. We have the interest rate decision out of the RBA on Tuesday. And again, most of the central banks have been jumping the gun and releasing or changing their interest rate outside the schedule. So we'll have to be paying attention to see if that is the case. There are some minutes coming out of the FOMC on Wednesday. We may trade that one. I didn't put it on the calendar. I think even these kinds of fundamentals are going to take a back seat to everything else going on, but we'll see. I may add it later to the calendar. And we do have the change in employment coming out of Canada Thursday morning. Those would basically be the two or three events that I would be trading live. Also noteworthy is that the week before we had unemployment claims in the U.S. were above 3 million in a single week. Last week, I've been told they exceeded 6 million. So that brings the total very close to 10 million unemployment claims within the last few weeks. That is a devastating number. At some point, it will start affecting everything, including the currency market. For whatever reason, the dollar has been gaining strength, at least in the past week, and that's the reason some of our trades are going against as well. We're playing into the longer-term expectation that the dollar is going to be suffering to some degree. And not all of the trades are in that direction, but enough of them that we are, as I said, a little bit negative on the intermediate. And again, we'll be adjusting to that as the week begins, depending on which way the market jumps. So we're in waiting mode right now to see what's going on. The market already opened, of course. It is past 6 p.m. The market opened a little bit more than an hour ago. No significant change, no significant gapping that I could see when I very quickly looked at some of the charts. So it looks like whatever the price levels achieved on Friday were, they are continuing as the market opens. With that, we move into the charts. As I mentioned, oil did go down all the way to 17.39 a barrel in the last week or so, and then staged the recovery throughout the last 3 days, so Wednesday, Thursday, Friday, going back above $27. That's a $10 gain, which again, if we figure that it was at 17.39, it went up far more than 50% in a single week. That is a huge move, obviously helped by the fact that it had dropped so low. So we'll have to see if that movement continues into the 30s, maybe even into the 40s, where I would expect it to at some point gravitate. This will bolster the Canadian dollar to a certain degree, and will probably make me a nice amount of money in the background with my oil options, but that is neither here nor there. Moving on to the currency markets, euro dollar we can see went down pretty much all week. All 5 days were bullish candles. It dropped quite nicely for no real reason. As I mentioned, with everything happening to the U.S. economy, there is no real reason why the dollar should be getting stronger against the euro or against anybody else. Nevertheless, that is what is happening. I would expect at some point the market will react and move it in the opposite direction. But I try not to trade my expectations or gut feelings, but rather what the charts are doing. So in that sense, I will be waiting to see what direction the market jumps as it begins this week. Pound dollar, much different story. We can see that the dollar lost the fight against the pound the week before, and then this week was pretty much, well, it did drop. It dropped to that trend line as support, but a much smaller movement than what it had done the prior week. So essentially, it is moving sideways right now, and we're waiting for a breakout in either direction. USDJPY, same story. It went into yen strength quite nicely the week before. And then last week sort of moved a little bit in the opposite direction, but in general, more sideways than anything else. So another one where we're waiting for that bigger movement or that breakout to see which way we'll be trading it. USD Canadian, again, same thing, a nice drop the week before, a little bit of a movement in the opposite direction this past week, but more sideways than anything else, and still hugging the bottom of that of those two trends. The bottom one is being closely followed by price action. At some point, it's going to move away from it in either direction, and we'll be ready to trade that. USD Swiss, a completely different story. So we had the prior week a movement into dollar weakness, Swiss strength, a pretty big one. And then this week it moved a little bit more than halfway in the opposite direction. So we had Swiss weakness, dollar strength playing out on this pair. Aussie dollar going a little bit also in both directions, a much bigger movement into dollar weakness the week prior, and then this week a very slow movement in the opposite direction. I think we've already been trading this one down to some degree simply because that's what the market was doing. I forget on which account. We might even have a trade open on this one. But again, we'll be waiting to see what direction the week takes off in before we trade anything further. Kiwi dollar, almost a twin to the Aussie dollar at this point. They're back to being very closely correlated, so we can see that the charts look pretty much the same. Aussie Canadian moving in very wild swings, and again, the CAD has been doing everything under the sun. It's been weakening, it's been gaining strength. The Aussie as well. Last week, the CAD was the clear winner, but again, it's gone nowhere near the prior lows, so it's still a good 300 pips above the prior level of support at the very bottom of the chart. Euro Swiss open trade on the intermediate, and I think we're either at profit or close to it. We're probably closer to break even, but it has been moving back in our direction. We're trading this one down, which is the direction of the overall trend, and it is getting very close to attacking the bottommost level of support yet again. We'll see if this time it manages to pierce it and give us a little bit more profit. This is our longest running trade right now, our longest running open trade on the intermediate term account. I think it was opened early March, so it's going on a month at least. Euro pound, we are trading this one down. Friday, we had a little bit of a retracement there, but in general, we can see that the direction of the euro pound is towards the bottom. So we will be holding on to at least that trade. We might be adding to it if it continues its downward direction. EURJPY went all the way to not quite to the bottom, but very close to the bottommost levels of support. Very scary pair to trade, as it has been moving in both directions by hundreds of pips within a single day. So even though we can see that the overall end result has been a drop, that was not the case if you were in the middle of it. You would have seen it going up 200 pips, going down 300. Which made it very difficult to trade, and we did stay out of it for that reason. Euro Canadian seems to be testing support once again, pretty much where it's at right now. So we did see significant euro weakness last week and a little bit of CAD strength as well. I think we traded this one. We may even have a trade open as well. I haven't looked at the open trades today. But we are seeing that downward pressure. So if we don't have a trade open, if it drops a little bit more, we most certainly will start getting into this one. Pound JPY, very flat, uninteresting week. So it did move, 50, 100 pips up and down, but generally did not break its range. So another one where we're waiting for a breakout in either direction in order to trade this. Aussie JPY, pretty much the same thing, but we do see more of a downward direction than anything else. So it is sideways, but it's right now at the very bottom of that sideways range. It has recovered by probably around 400 pips, maybe 500 from its prior breakout low, and it might very easily go back down for a test. Euro New Zealand flat, and another one that moves in hundreds of pips per day. So we've been leaving this one alone. But if it does make a breakout pretty much in either direction, we'll start trading it slowly, small lot sizes. But this might be a very good mover once it does pick a direction. Pound Canadian trying to go up, failing, hitting resistance, dropping back down, but also in a sideways range of about 400 pips. So it's going up and down by 400 pips. Makes it a scary thing to trade intraday. But once we have a breakout, we're probably going to catch some good traction on this one. Last but not least, Swiss going up. We've also started trading this one up in at least one of the accounts, looking for that breakout towards the top. Not sure why the Swiss is having issues this month, but it is, and we'll continue while trading in whatever direction it happens to be going at any given time. That is it for the chart setups we see in progress. I said this at the beginning, no change. I don't see any light at the end of the tunnel yet. Everything in the markets are going to be revolving around the coronavirus issue. No matter where in the world you are, no matter what economy you fall under, everybody right now is reacting to the coronavirus. That is not likely to change anytime soon. And that's it. A few words in conclusion here. And I read this somewhere, but basically the saying is that the time to plant a tree when you want shade was about 20 years ago. We become accustomed to instant gratification thanks to the technology we enjoy today. And this is around the world. It doesn't matter if you're a rich country or poor country. You have access to a lot of the technology that makes life pretty good these days. And again, instant gratification has become the norm. But this is an anomaly, historically speaking. And right now, we're suddenly looking at people realizing how anomalous that situation was as we face what many seem to see as the greatest threat in our lifetime. I sort of don't agree 100% with that. I think a big part of the problem is we're attacking this the wrong way. Yes, it's a scary disease. Yes, about 1% of people are going to die if they all catch it. But at the same time, we're prolonging this. So we're trying to make people catch it more slowly. they're still going to end up catching it. So we're all going to be infected at some point if we haven't already been. The same 1% is going to be unfortunately leaving the planet. But by prolonging it, by attacking it the way we have been, instead of letting everybody catch it quickly, the result has been people laid off by the millions, as I mentioned, 10 million and counting just here in the US. The governments are desperately trying to pump money into their crashing economies. People are panicking, some are dying, and the rest are suddenly realizing that they should have planted that tree 20 years ago. The market is my tree. I'm one of the few people, and hopefully you are too, that's not too worried right now because I still have money coming in every day. I don't rely on a job to send me a salary every month or a job to tell me I no longer have one. So, you know, Andy, figure it out, or the government to send me some of my money back that I paid in taxes. I'm actually still making money, and hopefully most of you are as well, at least the people listening to me right now. So again, how long ago did you plant that tree? And if you didn't plant it at the right time, which was 20 years ago, then the second next best time to plant it is right now. You're not going to be able to enjoy the shade for another 20 years, but every day you delay is another day without shade when that time comes. So those are my parting words for today. Again, I'm always looking for advice from all of you on how to reach more people so I can help people plant those trees and get shade in 5, 10, 20 years, whenever it's going to be. So email me any suggestions. As always, I will be happy to get them. And that's it for me for this beginning of the week. Do I have any comments or questions from anyone? Okay, then thank you very much. And I will be talking to you tomorrow. Have a great rest of the weekend and be safe out there.